What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. Today we're going to be going over Clean Energy Fuels, ticker symbol CLNE, and it's one of the most talked about stocks of the week on Wall Street Bets. So there's a lot of people talking about the stock, buying into the stock, and overall there's just above average volume in the stock as of recently. A lot of people have their eyes on the stock. People are thinking it's the next meme stock, but I think Clean Energy Fuels has a lot of potential despite being so heavily talked about on Wall Street Bets. As you can see on the Wall Street Bets chatter, CLNE is ranking on the number one spot for today, Tuesday in the market, as well as being one of the most talked about stocks on Wall Street Bets the past week. Second being Wish, third being Clove, and then fourth being AMC. Now, still don't sleep on AMC. AMC still has a lot of people buying the stock. A lot of people are backing it up, and it's still the number one talk stock on Twitter. So keep that in mind. But CLNE has been trending in the market, and now we're going to be determining if it's a good buy and what type of strategies should we use on this type of stock. So Clean Energy Fuels, there's been some good news for this company. They plan to develop natural gas from dairies as well as other agricultural facilities, and they're actually partnering with Total Energies, ticker symbol TOT, as well as BP, which is an oil and natural gas company. So this is some pretty good news. It's a really good catalyst for Clean Energy Fuels. As we can see, it's been trending recently. It had a low price of around $7-8 mid-May, and right now it went to highs of $13. And now it's had a little bit of pullback, but it's sitting at a nice $11 price point. So I think at this price point, it's pretty good to get in. The 52-week high is almost $20, so it's sitting about half of that from its all-time highs. So if you want to get into the stock, buying shares wouldn't be a bad idea, as the stock price is super cheap. It doesn't cost that much, only $11 per share. So you could buy like 100 shares for $1,100, or you could do some options if you're feeling a bit risky. The options, as we can see, is pretty cheap, and despite having a pretty meme status, it's not that bad to buy options on this stock. It does have a pretty high implied volatility because of all the volume, all the people buying into the stock. So I wouldn't recommend buying a June 18th call. You want to do something at least July 16th or later. September 17th would be good, even December 17th. You want to buy like a longer term option on this stock. Give yourself more time for the play to play out, and overall you'll be a little bit more profitable and safer that way. You could even do January 2022, which is half a year from now, and that would be a pretty good option as well. I would say September would be pretty good. 3 months out, give yourself some time. And as we can see, the contracts here are pretty cheap. So you could do something like a $12 strike call, all the way up to, I would say, go up to $15 at most. Those would be pretty good strike prices to purchase. You don't want to go too far out of the money. So something between $10 to $15 I would highly recommend. As we can see, it only costs a few $100 to buy a call option for 3 months out, and you're basically going to see some really good returns if Clean Energy Fuels does happen to have a really good rally day. So that's what my take would be. You could also sell some short-term puts, cash secured puts being my favorite option strategy. It's made me very profitable in the market, even when the markets are slightly down or flat, because selling cash secured puts at a low strike price is a neutral bullish position, and you still make a little bit of money too if the stock slightly decreases, as long as it doesn't tank. I mostly win on these trades. But yeah, cash secured puts, one of my favorite strategies, and usually it's pretty profitable for me. So let's go for an example here. We'll go for a sell put. You could do a June 18th expiration date, a $10 or $11 strike if you want, which is kind of risky. You might get assigned if Clean Energy Fuels decides to pull back. You don't have that much time for it to recover, but the good news is it's a lot safer than outright buying shares, because if it does go below your strike price, you're going to be buying shares at a lower price than what it's currently at. So for example, if you bought 100 shares right now, you'd be paying $11.24 per share. But if you sold a put and then CLNE drops, you're going to be having a lower cost basis. You won't lose as much money. You're going to be buying shares at either $10 each or $11 each. So even the $10 strike would be pretty good. There's a high probability of winning. And if you have $1,000, you could sell 10 contracts and collect $200 of premium, which is pretty good. Sorry, if you have $10,000, then you can sell 10 of these contracts. Because remember, every contract is going to cost you the strike price times 100 in order to put down as collateral, in order to sell a put. Because we're going to be selling cash secured puts. Robinhood does not let you sell naked puts because that would be unlimited risk. So as we can see here, this would be a 2% return on your money in just 2 to 3 days. Because we do have a June 18th expiration date, keep in mind. So that sounds like pretty good money. If you do manage to do that, it's going to be pretty safe. And obviously, if you sell the $11 strike price, you will be receiving $730 if you put down $10,000 of collateral for that contract. But if you want to put the expiration date out a little further, July 16th would be good. Probably you don't want to do September selling a put. That might be a little bit too long. It'll take a little bit longer for you to realize your profits. But July 16th probably would be my go-to. A month out gives us a lot of time decay for the premiums to bleed out. And as we can see, we can do a $10 cash secured put for $115. So if you have $10,000 in your account as collateral, you could get 11% return on your money in just 1 month. And that's really good because most people, they make like around 10 to 15% per year just by passive investing. So we're beating the market just in 1 month, which sounds like pretty good money to me. If you want to be safer, you could do a $9 strike for $630 of premium if you put down $9,000 of collateral. And these are pretty good strike prices. If you think that CLNE is going to stay flat around the $11 mark, you could even do the $11 strike for $180 per contract, which would yield you an 18% return in a month as long as CLNE stays above $11. So those would be my recommendations. CLNE is a great stock to sell puts on because the price of the stock is super low. And overall, I think there's a lot of chatter around it. And there's some really good catalysts coming out for this company, as we saw with the partnerships on Clean Energy Fuels with those two other energy and oil companies. But that's my take on CLNE. If it helped you in any way, please leave a like. Comment down below if you have any questions, what type of videos you want to see. And of course, please consider subscribing if you're new here to the channel. It helps out a lot. Thanks for watching.